There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey, everybody. Welcome once again. Hard Money Podcast. Good to have you with us today. Lots to cover on this as we get into another show here. You'll want to reach out to Darren and the team anytime. Maybe it is time you open up that part of your portfolio, get some hard assets in there. It's always a good time, right? 1-877-323-GOLD is how you do that. DeltaHarbor.com, Harbor with a U, always, because this investment's about you. And we're Canadian on top of that as well. Social media, anytime. You can catch this podcast, Google Podcasts, Apple, Spotify, iHeart, anywhere as well. Same goes Delta Harbour for Instagram and Facebook and Twitter. All right, Darren, let's get this happening, buddy. A big pullback, gold and silver, big drop in both metals. I'm assuming that signals a great buying time on your end, but what gives, buddy? What's going on?
Well, gold and silver, John, and welcome everybody to the show this week because it's an important one for sure. We're going to talk about a couple of definitely important concepts and topics that aren't getting enough in the media. But gold and silver for sure, both oversold. I mean, it's ridiculous in silver's case because both metals, although here, as we tape on Friday, September the 2nd, both metals have found support at the moment late in the week. Everybody's in vacation mode right now. In the immediate short-term path, the path of least resistance remains down. So that is just what this type of week has been and presented us with. It is a very classic bear look in the very immediate short term. This is not long-term view of this particular analyst or anything to say that. But over the next few days, we might see even lower prices than we saw. We tape here on Friday. Gold, which dipped to below 1690 through this week, is trading at around 1715, while silver, which dipped to as low as 1750 range this week, is now trading in the 1850 range, which, I mean, and again, I point this out because this is a very, very simple bit of math. If you just were to grab and take a peek at your calculator and do the very quick math, you'd find that if I was to look at silver right now at $18 roughly, to get a 30% tick up to 23.40, it's 30% return on your money, the price would only have to migrate up towards the 23.50 range. And we did shows in the last 2 months where the price was there. So to get 30% return on a person's money right now for somebody that's buying for the long term in an oversold market with conditions like we currently have, and one of the topics we're going to discuss in the show is bonds and seeing what the bond market is doing, how that relates to gold and silver. It's a very, very important time to be paying attention. The markets are still a bit spooked. Job data came through, ADP report was flush. And again, in the US, the big one we watch here on Friday came out, payroll report, again, flush data. So in line with expectations. Again, remember, when it talks about job data, and people know right now that there's a lot of jobs available, they don't talk about the quality of jobs. They don't talk about whether it's a career position, a part-time position, or a contract position. They just state the numbers as they fall, and that's it. So we had a one-day intraday rally in both gold and silver, and right now the momentum is pushing to slow until I would say Monday night for sure, because everyone is in vacation mode. And we've talked about it long enough, Johnny, but it's here, buddy. This is the last week in the summer. So God bless those souls that have taken off and left the rest of us with an advantage. But if you're listening to this video, you may still be able to take advantage of gold and silver at these low prices.
Well, I mean, you just mentioned end of summer, hate it. The sad seasonal affective disorder is going to be kicking in pretty soon for this kid. But there you go. Begs the question, what do you see lying ahead as far as everything's concerned?
Well, I see a lot of vitamin D in my future, I'm sure. I'm going to take it all winter this year. It'll be the first time in my many moons of existence that I've done it, but I've made a plan because my grandfather's almanac says we're having a heavy winter. So I'm going to pay attention to it. And he left that to me when he left this world, and I took a look at it. And it's predicting a heavy winter. So
great.
I'm watching that. I'm paying attention. We're getting the last throes of sunlight as we can on our skin and trying to look the best we can and enjoy what's left of this summer. But John, as we look ahead now, and we're in this very inflationary environment where we're hopeful, obviously, that we don't inflate further, but we're not certain we will, because federal banks, central bankers, all have this erection for higher interest rates, and they don't give a shit about whether the recession hits or not, or whether it kills the working man. And that's exactly what it's doing. So what am I watching? Well, right now I'm watching the bond market, because in the US, it's under pressure from some central bankers who are exactly what I just said, determined to quash inflation, even at the cost of recession. And if you look across the board at global bond rates, this is the very first time in my 20 years of being in this market that I've seen this. But as I look back, and the data tells me, my colleagues, my analyst colleagues on the market say, this is the first bear market in bonds in a generation. So if you look at the meaningful statistics, the data that tells us where we are, take a peek at the Bloomberg Global Aggregate Total Return Index of government and investment grade corporate bonds. And you'll see that that has fallen 20% below its 2021 peak, which is the biggest drawdown it's had since its 1990 inception. So I went back and looked at the data, checked it all, started measuring it in 1990, and this is the biggest single drawdown that we've had at 20% since 1990. So literally 4 decades of a bull bond market. And soaring inflation and steep interest rate hikes, which have been deployed by policymakers the world over in response to all this, have brought to end what has been a 40-year basically bull market in bonds. And that's creating a very, very difficult to manage environment for investors, especially as we progress through to third and fourth quarter of this year. And bonds and stocks are now sinking in tandem. So this is a very sketchy moment. And when I see this, I'm reminded that these are among the many reasons why I use gold and silver to, be the anchor in my portfolio, why I use it to balance my wealth, why I use it to diversify my wealth.
Again, guys, 1-877-323-GOLD. Anytime to make that phone call, do it. Talk to Darren, have a lengthier conversation about this, getting this part of your portfolio. If it's not up and running, get it up and running, get some hard assets in there. And I think it's, after mentioning the phone number, what you just did there, Darren, it's always a prudent time to our folks that are listening and watching this podcast every week. And for those already invested into Delta Harbour, that you've always maintained it's a long-term approach with gold and silver ownership. It's, gold for your golden years, as Gerald Salente used to like say, one of your favorites. And that's the way to look at it, right?
I do think it is, John. I think that is the absolute truth. You do not buy in this day and age unless you are a wealthy individual with deep pockets. You do not spend time focused on what the stock market's going to do today or tomorrow. You look at it long term, and the same thing can be said of gold and silver. When we talk to clients, we talk to them about the way we feel gold and silver should be held and owned for the long term. Now, there are cycles in between. 2004, 6, 8, 2011, 2020. In which the price rallies. And when it does, that's the selling opportunity we get to protect our principal, protect our profit, and then to re-engage at a lower point. And that's what silver and gold has done for us. But if I've done nothing over that span of time, well, gold and silver have migrated hundreds of percent higher since I entered this market 18, 20 years ago. And so Delta does believe in gold and silver ownership over the long term. I mean, we have no idea. We could sit here all day and go back and forth with the best analysts in the world, but we don't know what the stock market's going to do tomorrow. News takes it every which way, and half the time, more than half the time, it's the wrong way. Right? You get news that would typically take the stock market up, it goes down, and vice versa. So we never know, nor can our guesses about tomorrow's inflation be relied upon as pure truth. Right? We don't know that inflation is going to level off anytime soon, any more than we know it's going to hit 20%. Next month. We're just watching it as it happens. So instead, we try to just connect the dots to understand what's happening here in the market. And when we look at the markets from a wide perspective, we're just looking for the primary trend, right? The deep tide, so to speak, beneath the waves, or the truth behind the headlines that gets spewed by again, our friend Carol Salente would tell you, the untrustworthy prostitutes that just basically say whatever they can to get a rise out of people, to get eyes on their site or eyes in their paper. And we look for the primary trends that will raise our vote for many years. Gold and silver have been one of those huge trends for us. Huge in the sense that if you look at the long term, if you did nothing, just bought, 2006, 2007, 2008, 2009, 10, 11, you're up. You've held and made money, and that's what it's all about. And there are many trends, John, and I look at it from a perspective of being simple, humble, because too many times I've seen folks come through these doors and they're trying to get rich quick. And that is not the way the investment world works. If you look at where we're at right now, and this is what we see that will help us to pick the primary trends to give us reason and foresight to own things like gold and silver. The stock market topped out in December of 2021. The Dow at that time was over 36,000. And the bond market also topped out in the summer of 2020. And the yield on the one that we watch the most, the 10-year treasury in the US, well below 1%. So right now, when we look at the bond market, this is not a pause. This is a reminder to folks that want to delve into this, that want to look into this, or that just want the primary trend going forward, that the bull market of the last 4 decades is over in the bond market. And this marks a new primary trend. So when we take that into consideration with where interest rates are heading and where investments are going in terms of stock markets and other types of investments, we have to weigh out the value of owning physical gold and silver. And this is the moment in which you want to have those things at cheap prices when nobody's paying attention. And a lot of people are very fearful. You should be buying and getting aggressive.
You mentioned bonds a couple of times. What do you do with bonds as far as in terms of trying to understand the marketplace? What do you think? What do they tell you?
Well, I mean, when I look at bonds, it's pretty simple. And the interest rates they reveal, they tell us which way the strong undercurrents are running. They measure indirectly how much capital is available and directly how much that capital costs. And for example, if I was to look at a place like Switzerland, they have plentiful savings. They have reliable borrowers, a pretty affluent population. Typically, they enjoy very low interest rates because of it. But if I was to turn around and look at a place like, deep dungeons of Detroit or somewhere that's, fairly not well off anymore in the US, and I was to look at a payday loan place there, well, or a poor country like Nicaragua or maybe Guatemala, they're going to have much higher interest rates. And that stands to reason that that's in relation to all of that sludgering back and forth in this big sea of finance and economics. And so when you look at the capital available, in those, there's less capital available, so they have higher interest rates, right? Because you're not getting volume of credit being borrowed, you're getting low volumes, high interest rates, so those people lending the rates will make an honest living.
Right.
And the risk too associated with those areas where lenders might not, borrowers might not pay back the money. And generally, as we watch the world get richer and richer since 2000 and on, interest rates went down. Right. So again, they trended toward 2006, 7 going higher, and then boom, 2008 hits, interest rates start plummeting all the way down, and they stay there. Right. And the Federal Reserve in the US, which coincidentally dragged every G20 nation with it, did something tragic 20 years ago when they dropped their key rate from what was above 6%, which meant at street level you had, interest rates that were probably in the 10 to 12% range time to below 1%, where we most recently just came from.
Mm-hmm.
But if you look at it, the one question you have to ask was, like I said in that example of Switzerland, was the US richer? Was Canada richer? We lowered our interest rates. Did we get richer? Right? Were savings more abundant? Were savings in the low interest rate period in Canada suddenly way higher? The answer is no. It's a resounding no. And so what happened was the central banks thought, there's a moment that can define moving forward what we need to focus on. And what they need to focus on is themselves and the cronies that support them. They don't give a shit about the public at large. They can't. They're too astute. They're too structured. They're too square. They're not focused on making sure that the everyday guy working 9 to 5 comes home, makes a good living, and has a nice house to live in, food to feed his family, and that vacation to go on 2 or 3 times a year. They don't give a shit. You have to earn that yourself by learning about these things. So the central banks around the world that followed all lied at the same time, including the Canadian Central Bank. They gave us a big tub of bullshit, which basically meant the US Federal Reserve, the central bank of the US, they fed to us intravenously a slow drip in a stream of data that got kicked around and altered to whatever bloody way it needed to be. And that's what happened. Adjustments in data occurred all the time. They will post something and then 2 weeks later, they'll adjust it, right? So upon the perfect post, it might have been right in line with expectations, but 2 weeks later, it was below expectations, which had it been posted on the day of and accurate, would have led to, the real effect of loss of value in the stock market, loss of value in the bond market. These things would really occur, but all of this bullshit getting slushed around in the pile just simply meant that it made it easy for them to lie to the public, which they did really well. And that made their narrative fit perfectly. But what is important about interest rates is not that they are high or low, John, but that they are honest. And what do I mean by that? Well, the US Federal Reserve, along with all the other big, huge central bankers in the G20, G8, they were manipulating credit prices in order to give the impression that we were richer than we really were. And we all took and bit that line, hook and sinker. And ultimately that developed into what this last decade was, which was the idea that they wanted to boost their stocks. They wanted to focus on supporting their corporate entities, increase spending and stimulate the economy. But how do you do that? Well, you have to give the impression that everything's great, that there's never going to be a problem. And that's what they did. So when 2008 came, it wasn't a surprise to me. They repeated the scam all over again. And they said, hey, it worked from 2000 to 2008, right? When we left the tech boom, the dot-com era, and it crashed, 9/11 happened, we went into the second period from 2000 to 2008 with the aggressive. So we started encouraging borrowing, more house buying. In the US, they had the subprime debacle. And, here we didn't feel it as much. But then 2008 hit, everyone felt it, here too included. And they repeated the scam, this time pushing rates down to effectively zero. And in real terms, adjusted for inflation, rates actually went, the Fed funds rate stayed below zero for more than a decade, where it still remains to this day. And here too in Canada, it is bullshit. You cannot trust what they say. And that's why we're in this position we find ourselves in, John. And that's why we think that assets like gold and silver should fundamentally be part of every single wealth strategy, rich or poor. It doesn't matter who you are, registered accounts, no registered accounts, all of you should be owning gold and silver at some point in time. How much? That's up to you. When? That's up to you. What do you buy, gold or silver? That's up to you. But we can certainly help you along the way, for sure.
It's interesting when you mentioned all that. It kind of makes sense to the average, or why the average person acted so irrationally, I guess you could say, over the last decade. I mean, spending habits as though the money flow never ends, right? It's bountiful. Go for it. Why bother looking around?
It really left that impression like you could go for it, right? I mean, listen, that's what people felt post 2008. It was this sense of doing all right, getting good grades. The future is so bright. You got to wear shades, right? So I mean, ultimately, speculators acted as though money had no value. I mean, think about it. Think about that just for a second. And when you use the term irrational, that's exactly what it is. It's called irrational exuberance. And I don't know who coined the term originally, but I know Alan Greenspan used it when he was talking about the way people act when you're printing money. And he said that builds up irrational exuberance, which creates irrational choices, which creates irrational outcome. So we bid up the prices of meme stocks and bid up the price of cryptos like crazy to these preposterous levels. We risked money on NFT, $1 million on things that didn't exist. You couldn't touch them, right? You couldn't touch them. They were nothing. They didn't exist. It was a piece of art that anyone could duplicate. Anyone in the world could duplicate and own 20 million of them.
I don't get it.
But you figured you had the first one and it was yours in the cloud, in the world. And, whether it was the Snoop Dogg real estate in the NFT world and the crypto Bitcoin craze, all these things, they all added up to this rational exuberance that took place for an entire decade. And we risked money on things we would never have risked money on. It was bad enough that in the 90s, we went through the dot-com era where we were paying, egregiously high amounts of money for these stupid stocks that produced nothing. And we did it again and again. And now we're here 10 years later and we're going to suffer the backside of this, right? Businesses borrowed to buy back their overpriced shares, right? And no wonder the US government spent trillions on unwinnable wars and abroad and very inefficient programs and silly concepts here at home, same as Canada. We're no different, right? We participated in all this too. So to me, I asked the simple question, is it a surprise that in the US, every man, woman, and child, every single man, woman, and child, not just taxpayers, every single man, woman, and child owes a debt of $92,000 right now to their government, right? That's what their government debt is. $92,000 for every single man, woman, and child. And so when I look at that, and I realize that the US, the largest economy in the world, now has $90 fucking trillion worth of debt. It's insanity, right? That's public and private. So much that the pain of reducing inflation will most likely be more than what the elite can stand. So pay attention to this because this is going to change. In order to stop inflation, central banks are raising interest rates. That's what's happening. And in the US, every single 1% that the interest rates rise, the federal level, if applied to the whole debt of the country, would add and does add $900 billion in extra expense annually. And so when I look here in Canada and I apply the same numbers, and I realize that every man, woman, and child here in Canada owes a debt of $30,000 to $40,000, right? In comparison to the US, we're much smaller. It doesn't surprise me that our central bank has no choice but to follow suit. And they will. And that's why we are where we are. We think everything's all right. Analysts are telling us, hey, it's okay. Don't worry. We're looking pretty good here. Jobs are abundant, man. But let's be honest, right? If I finish school and I put time into educating myself, no matter where I went, what I did, what degree I have, and I'm walking out of school and I'm getting a $17 an hour fucking job, is that really good? Are we creating really good outcomes for our families and for the people that are meant to trust us to be the breadwinners, to bring home that bacon, so to speak? No, you're going to need 6, 7 people in your house earning an income within the next decade. So you may as well get smart. You may as well get ahead of them and play their own game. What do central bankers buy? If all else fails, at the end of the day, what do the biggest banks in the world own to protect themselves? Fuck, if they own gold, right? They're full of it. They're full of it. It's an abundant resource for them. The IMF, International Monetary Fund, what the fuck do they own? Gold. What do banks settle in if they can't agree on the currency? They settle in fucking gold. And yet here we are still trying to figure our way out as 9 to 5, blue collar, white collar. We're schmucks. We're the sheeple, John. And so we got to get smart. We got to do things that make sense. And one of them is diversifying our portfolio. Raw land, merging trends, collectibles, things that are of value and will grow in value in 10 years. Finite resources. Why the fuck do you think people like Bill Gates are buying raw land? They didn't just come up with that and say, I love the view of the States. I want to keep as much of it as possible open and green. He's one of the world's richest men. He's buying land. What does that tell you, right? So when I sit here, it frustrates the hell out of me. But the truth is, John, that our clients understand. They understand the concept. They're here because of it. And of course, they want to be smart with their money. And we want our clients to have value, long-term value. That's why we encourage the ownership of gold and silver.
Is the result moving forward, Darren, an equal and opposite impact? I guess the result of record highs in pretty much everything. I mean, is there going to be a huge snapback to all this?
Yeah, I think what we've seen is that a lot of folks wonder, where does the money go, right? So, I mean, in that last example, I said, if debtors pay out an additional 900 billion because interest rates rose 1% and somebody has to pay that 900 billion, the obvious thought is creditors must take in an additional 900 billion, right? I mean, 900 billion out, 900 billion in. Yep. A buyer, there's a seller, right? The economy has not lost a single penny, right? Well, that's not exact, right? As interest rates rise, fewer people borrow. And more existing credits are canceled or termed bad debt. And so they get washed over. So our entire monetary system, which is based on credit, a decline of the amount of credit outstanding is the same as a contraction of the money supply. It's detrimental to it. We just don't feel it because it's paved over. The headlines tell us don't worry, and we fall for it every fucking time. So our monetary system is a very, very good tool if we just keep our eyes on simple things. We've been talking about bonds during the show today, and a decline in the bond market tells us that the tide of credit on which the whole economy stands, real and fake, right? There's two types of economy, real and fake economy, and floats is going out. That tide is slowly going out. Yeah. And already, if you look at it, the Dow, right, down 15%, 10-year treasury bond, the yield from the 10-year treasury bond is more than quadrupled since its 2020 low. And if you look at mortgage rates, doubled, right, since the low. Look at lines of credit. We just had this conversation yesterday with a neighbor right across the street from my house. We were talking, like, asking me, where are interest rates going? And I was like, tell them what I know to be true. They're going higher. They're going to continue to go higher, at least in the short term. Okay, well, should I pay my line of credit down? And at first, because of what I do every day, because of the show, because of what we talk about, I'm thinking to myself, really? Interest rates have gone up 100% in the last 5 months, 6 months, and you're asking me if you should pay down your line of credit? And then he says the best one of all. I've got a variable rate mortgage that I locked into 2 years ago for 5 years. Should I break that and lock in? I'm thinking, holy shit, where have you been the last 6 months? And that's just proof in the pudding that people don't pay attention, right? This is a person who's affluent, lives in a 4,000 square foot home, has money to burn, and they don't care. They're not paying attention. They're not watching at all, right? Yeah. His line of credit is an $800,000 line of credit.
Damn.
Some people have it, right? It's walk of life, depends who you are. And he's wondering, should he pay down his line of credit because interest rates have doubled?
Duh.
I don't know. I mean, have we gotten so used to the idea that we love giving our money away that it's an accepted concept now? So in a decline in the bond market, it tells us that tide of credit is slowing and that, it's going out. And so when we look across the board and we look at things like mortgage rates, which have doubled, these are so far just modest corrections. These are not, tilt the board, we're going to die tomorrow type of corrections. Go and get your canned food, live in the dungeon you built in the basement because it's the safest place. It's not there. We're not there at all. This is just a modest correction. And already behind the scenes, there's so much papering over the truth of what is really happening behind the scenes. And that is, middle class is losing value.
Yep.
Savings are depleted. Mm-hmm. We have no disposable income to spend because freaking huge percentage of Canadians are $500, $600, $700, $800, $1,000 away from being bone dry in cash. Oh. And we're gassing our credit cards and lines of credit. And we're borrowing from our houses like they're fucking ATMs. And we're doing simple things that we think are going to save us, when in reality, long term, they're going to bury us. They're going to bury us. So if you do have wealth, if you do have the ability to have a little bit spread around somewhere, and if you are concerned like me and you have that passion to want to survive and thrive and do extremely well in the long term, then you have to pay attention to these things, right? If we look at what the primary trend is right now, John, and we take away everything that we see happening, and we look at the last one, from 1980 that we saw, when the end of the bull market came, when interest rates went way up into double digits, mortgage rates were 20%, ridiculous times. And we apply that right now to the same logic. The Dow's dropping below 25. We're at 31,000 and change right now. It's dropping 1/3, down below 20. The TSX, if you apply the same logic, 1/3 drops, going down 6,500 points, 7,000 points, down below 14,000. Bonds are going to be crushed. Mortgage rates, I bet you, if I had to bet, steak dinner, 15% in that.
Come on.
Yep, 15%.
Damn.
That's where we're heading.
Shit.
And much of North America, economically and politically, John, will turn into a very big ball of confusion, jello, just so moving all around everywhere. There will be a ton of despondency. Do we hit the lows of the Great Depression? No, probably not, because we can print. This tool, the machine, to print more money. But when the hell do we pay that debt off? When do, as a country, we decide enough's enough? Right? People come to our country. It's a great country because they want to survive and thrive, and they want that dream of living free, and they want that ability to do it in a wonderful country that's free and alive, until somebody has to pay that debt back. Eventually, it has to be paid back. You can't just accumulate debt forever. If it was personal debt, the bailiff would have come in, he would have taken the key, locked the cage, and thrown it away and said, "You're buggered. You're screwed. No more. You can't spend anymore." But here we are. We're doing it. The strength of the correction in that respect, as you asked this question, is equal and opposite to the dribble that preceded it, all of the BS that preceded it. So that by that alone, Ron, the developing primary trend should be one for the record books, in my opinion. I think gold and silver play a huge role moving forward. And I believe right now it is like a gift being given to us. And I cannot overemphasize that point enough. No matter where you bought recently, no matter where you buy in the near term, the near future, there are very, very stealth metals that get talked about very little amount of time in the grand scheme of things. They get played such a role in world economies for thousands of years. And that's secret. They want to keep it. They want to keep it away from you, the average investor. They don't want you being or learning how to be your own central bank, right? Which is something we've talked about for years, John. But we need to focus on helping each other. And part of it is understanding hard assets and the role they play in diversifying your wealth. And having something at the end of the day, which is of value the world over, right? Which when all is said and done, you can still walk away with something in your hand that's tangible and present it to another person, another country, another bank, and it will still produce value for them. So that's what we think of when we think of gold and silver, for sure.
Well, let's take a look at that life jacket that people should be grabbing before it's too late, in the form of physical gold and silver. What kind of convenient methods do you guys offer, again, Darren, as far as getting that part of your portfolio either increased or starting if they haven't done so, right?
Well, direct home delivery is one way you can get your feet wet, John. Just go to the website. There's an e-store there, and you can shop just like anything else online. And we'll get that out to you pretty quickly and promptly, and it'll be delivered right to your home, fully insured. And anything over 1,000 is free shipping. So we try to support our buying public by using that. And it means you can see the products, right? You can see the bars and the coins and different types. Everything is investment grade. We don't do collectibles. There's no numismatics on the site. You can rest assured that we've done all the footwork for you over 20 years to make sure that what you're buying is, can be liquidated the world over, can be bought and sold anywhere, is the exact type of bullion that you want to own if you're investing in physical gold and silver. In addition to that, like last week, we talked about storage and the ability to store product and what that means, and the ins and outs of having really good, solid storage that's fully insured. That means you can buy and sell on the telephone, that keeps your product safe. So those are two options that we have and love. The other is the registered accounts, putting gold and silver in your TFSA and having them stay capital gains free. Right? $81,500, and you can put it into TFSA. I talked to 3 people today before we did this show who have never, ever once, they've got $300,000-$400,000 worth of RSPs. They've got all kinds of investments, and yet they're still petrified to own the TFSA. They think there's something like, ulterior motive with the government.
Best.
And there probably is, but the fact is
best.
that one thing is like them saying, here, we gave in, here, have the damn capital gains. One thing you can have that we're not going to care about, okay? So yeah, $81,500 of your money can go into a TFSA, buy physical gold and silver,
Yep.
and you never have to worry about if in 10 years from now the price of gold goes to $10,000 an ounce. Great. Take out that money and use it for whatever the hell you want, because there are going to be no capital gains on that money whatsoever. And then if you want to put it back in and use it again and go for the next ride, come on aboard. We'll do it again. So you got the registered accounts, RSPs, liras. If you have a pension and you want to move it over to Delta Harbour, we partner with Quest Trade. Easy to do, physical, gold and silver in storage. You can visit the product. And if at the end of the day you want to take that product home with you, you can also do that too. So that's another option. And then lastly, we talked about last week, we have the Delta Vault account, right? This is bulk bullion. This means we take a big whack to easily understand this, a big, huge chunk of silver and gold whenever prices are what we deem to be good pricing, and we stick it into the vault, right? So I might have 400,000 ounces of silver there, and then I have a client who comes along and says, hey, don't really know too much about silver and gold. And from what I've seen, I'm a little concerned about the premiums for bars and coins. And how come it's so far away from the paper price of silver and gold? Well, we address that by having the bulk bullion account. So you go in and actually own physical gold and silver, 1-to-1, 400,000 ounces, might be owned by 400,000 people, might be owned by 2 people. It's all accounted for 1-to-1. No 2 people own the same ounce of gold or silver. You all own 1-to-1 holdings in gold or silver. And ultimately that means that you're not going to pay those high premiums for bars or coins because we're not declaring what you own. We don't say, Mr. Smith owns 1,000 silver coins and then he also owns 200 100-ounce silver bars. We just say, no, he owns 20,000 ounces or he owns 10,000 ounces. You get a report. You get an online statement, you get a place to log in, and if you want to go see product, we will show you product. But unless you want to declare what bars or coins you actually own, and you want your serial numbers, you don't have to pay those premiums. So they're very low. It's the lowest priced way to own physical gold and silver, hands down, that I've seen in the entire world. And we're very good at it. I've been doing this since 2004. And the best part about that bulk bullion account, John, is that I can use my metals as collateral.
Yeah.
So if I already have 10,000 ounces of silver and I want to bring it over to this account, I can use that 10,000 ounces as collateral, borrow against my own holdings, or I can use it to bulk up my holdings, take my 10,000 ounces, and now I've got 20,000 ounces, and I didn't have to lay out the extra 10,000 in value. So that's a real awesome way to get ahead if this is something that's for you, if you've done the time to look at all of the different aspects of that, and you understand what's involved, which we'll walk you through every step of the way. And if you're not borrowing to do it, don't borrow to invest. Do not do it unless you are familiar with the concept of other people's money, or you can afford to use other people's money. Right? When people talk about using other people's money, like Kiyosaki or Gates or Buffett or any of them, they're doing very big leverage things with very big amounts of money, and they're using other people's money, which makes them rich. But they only do it because they can afford to do it. Mm-hmm. Got to be in that position to start with. But those are the 4 account types. We'd be delighted to hear from anybody, as we are. And as we get back to school, John, right now, if you can afford to pinch an extra dollar to support your local food bank, you know where I am on that. Been that way for a long time. I'd love to see it happen more often. And I'm making a big effort right at home in my town, and our food bank is flush with donations, food, money, and it's great to see. So I'm hoping that everybody else gets on that board and bandwagon and supports your local community, because you never know. You live in a 3,000, 4,000 square foot home, and you could live right beside somebody that can't make ends meet, that can't pay their bills, that has to go to the food bank to use their resources. So please take care of your neighbors. And John, as always, it's a pleasure to be talking to you and to our listening public. We're delighted that they could be with us for this week's show.
And that's pretty much it for this week. If you didn't get the message, get off your butts and at least do your research, your due diligence, get some of that portfolio happening with physical metals, gold and silver, particularly. Use one of the 4 options. There's so many options. You shouldn't be shaking your head at any of this. Just reach out to Darren and his team. Make the phone call, have a chat, 1-877-323-GOLD. Take your time, get educated first, dip your toe in the e-store if that's the easiest way right off the top. Buy a couple thousand ounces of whatever you like and then carry on from there. You want your registered accounts, bulk buying, it's all an option for you. But it starts with that phone call to Darren and the crew, 1-877-323-GOLD. And you can catch all this and more on their social media accounts, be it Instagram, Facebook, Twitter, and that is Delta Harbour, at least youtube.com/Delta Harbour to watch these and previous podcasts as well. And we'll catch you next time right here on the Hard Money Podcast.